Something incredible just happened in the silver market, and most people still don't fully understand it. Over the past year, silver didn't just go up, it exploded. Prices surged past levels nobody expected, briefly touching the triple-digit zone. And in the process, many investors quietly made over 100% returns. Think about that for a second. Doubling your money in a traditional asset like silver, not crypto, not a meme stock, but silver. And now, just as quickly as it went up, the market is starting to shake. Prices have pulled back sharply, volatility is rising, and suddenly the big question everyone is asking is, what happens next? Because here's the truth most people don't want to hear. The biggest money in the market is not made during the rally. It's made by understanding what comes after it. And right now, silver is at one of those critical turning points that could define where it goes for the rest of 2026. Let's break this down in a way that actually makes sense. Not complicated, not full of jargon, just real, clear insight into what's happening and what it could mean for you. First, you need to understand why silver moved so aggressively in the first place. This wasn't random. This wasn't luck. There were powerful forces driving this rally. One of the biggest was industrial demand. Silver is not just a precious metal, it's an industrial powerhouse. It's used in solar panels, electric vehicles, electronics, and green energy infrastructure. And over the past year, global demand for these sectors surged. Governments pushed clean energy initiatives, companies ramped up production, and suddenly silver became one of the most important materials in the global economy. At the same time, supply wasn't keeping up. Mining output struggled to expand quickly enough, and existing inventories started tightening. This created a classic imbalance, rising demand with limited supply. And whenever that happens in any market, prices don't just go up, they accelerate. But that's only half the story. The second major driver was investment demand. As inflation fears grew and global uncertainty increased, investors started looking for safe haven assets. Gold usually gets the spotlight, but silver tends to move faster and more aggressively. So when money started flowing into metals, silver became the high beta version of gold. Exchange-traded funds saw massive inflows. Retail investors jumped in, and momentum traders pushed prices even higher. And then came the third factor, speculation. Once prices started rising, more and more traders entered the market simply because it was going up. This created a feedback loop. Price goes up, more people buy, price goes up even more. This is how markets transition from a strong rally into something that starts to look like a bubble. Not necessarily a bad thing, but definitely something that doesn't last forever. And that brings us to where we are right now. After reaching extreme highs earlier this year, silver has pulled back significantly. Prices that were once above $100 have dropped into the $65 to $75 range. That's a massive correction in a short period of time. And naturally, it's creating confusion and fear in the market. Some investors are thinking, is this just a healthy pullback before the next rally? Others are worried. Is this the beginning of a much bigger crash? To answer that, you need to look at what's happening beneath the surface. One of the most important signals right now is institutional behavior. When big players, hedge funds, banks, large investors start changing their positions, it often tells you more than the price itself. And recently, there are signs that some of this smart money has started to step back. Open interest in futures markets has shown signs of decline, trading activity has cooled, and profit-taking is becoming more visible. This doesn't necessarily mean the market is doomed, but it does mean the easy money phase is likely over. At the same time, volatility has increased dramatically. We've seen sudden drops of 5% or more in a single session. That kind of movement is not typical for a stable, trending market. It's a sign that uncertainty is rising, and when uncertainty rises, risk increases. Now let's talk about macro factors, because they matter more than most people realize. The strength of the US dollar plays a huge role in silver prices. When the dollar gets stronger, metals like silver often come under pressure. Recently, the dollar has shown resilience, supported by interest rate expectations and Federal Reserve policy. If the Fed remains cautious about cutting rates, that could continue to weigh on silver. Inflation is another key factor. Earlier, rising inflation supported the rally in metals, but if inflation starts to stabilize or decline, that support weakens. Investors may shift their focus to other assets, reducing demand for silver. Geopolitical tensions also played a role in pushing prices higher. Uncertainty tends to drive safe haven buying, but when those tensions ease, even slightly, markets can react quickly in the opposite direction. And we've already seen signs of that happening. So when you combine all of this, slowing momentum, institutional caution, macro pressure, and increased volatility, you start to see why the market is no longer in a straight-up trend. Now let's get to the most important part. What happens next? There are really three possible scenarios, and understanding them can help you make better decisions. The first scenario is the bullish case. This would require silver to hold its current support levels and regain momentum. If prices stay above the mid-60s and start pushing back toward the $75 to $80 range, that could attract buyers again. A strong breakout above resistance could open the door for another rally, potentially targeting $90 or even higher. For this to happen, we would likely need supportive macro conditions, weaker dollar, stable or rising inflation, and renewed investor interest. The second scenario is the bearish case. If silver fails to hold support around $65 and breaks lower, the market could enter a deeper correction. In that case, prices could move toward the $60 level or even lower. This would likely be driven by continued profit-taking, stronger dollar pressure, and reduced demand. It wouldn't necessarily mean the long-term story is broken, but it would signal that the market needs more time to reset. And then there's the third scenario, which is often the most realistic. A period of consolidation. Instead of a dramatic move up or down, silver could trade within a range, roughly between $65 and $75 for some time. This would allow the market to stabilize, absorb recent gains, and build a new foundation before the next major move. This kind of sideways movement might not seem exciting, but it's actually very common after a big rally. Markets need time to breathe. They need time to shake out weak hands and establish stronger support levels. Now let's bring this back to you, the investor, the viewer, the person trying to make sense of all this. If you're someone who already made significant gains during the rally, the question becomes, should you take profits? And the honest answer is, it depends on your strategy. But what's clear is that the risk level is higher now than it was earlier in the rally. Protecting gains becomes just as important as making them. If you're someone who missed the rally and is thinking about entering now, you have to be careful. Chasing a market after a 100% move is rarely a good idea without a clear plan. Waiting for confirmation, watching key levels, and managing risk becomes critical. And if you're a long-term believer in silver, then short-term volatility might not change your overall outlook. But even then, understanding market cycles can help you make better entry and exit decisions, because here's the reality. Markets don't move in straight lines. They move in cycles. Expansion, peak, correction, consolidation, and then eventually a new trend begins. Right now, silver appears to be transitioning from the peak phase into either correction or consolidation. And how it behaves in the coming weeks will tell us a lot about what comes next. So the big takeaway is this. Yes, silver delivered incredible returns. Yes, many investors doubled their money. But that phase of easy gains is likely behind us, at least for now. The market is becoming more complex, more volatile, and more dependent on broader economic conditions. This is no longer a simple buy and watch it go up environment. It's a market that requires attention, patience, and strategy. And that's exactly why moments like this are so important, because they separate those who react emotionally from those who think strategically. So before you make your next move in silver, ask yourself one simple question. Are you following the crowd or are you understanding the market? Because in the end, that's what determines success. If you found this analysis helpful and want to stay ahead of the market with real insights like this, make sure to like the video, subscribe to the channel, and stay connected. The silver market is far from done, and the next move could surprise.